Assalamu alaikum, everyone. I'm Aisha Fayaz. I'm an equity research analyst at KTrade Securities. I welcome you all to the third quarter briefing session for Fauji Fertilizer Bin Qasim. Firstly, I would like to introduce the management of Fauji Fertilizer Bin Qasim. So I'm delighted to have the CEO of the company, Mr. Arif Rehman, and we also have Mr. Javed Akhter Saab, who's the CFO of the company. I would like to thank the management of Fauji Fertilizer Bin Qasim for taking out time for us and conducting this session. So before we begin the session, I would like to share the format for the presentation that our speakers from Fauji Fertilizer Bin Qasim will begin with a small presentation, and that will be followed by the Q&A session. And for the Q&A session, I would like to request all the participants to please write their questions in the chat box that I will directly read out to the management. And with that, I would request Mr. CEO and Mr. CFO to please begin the session. Thank you.
Thank you very much, Aisha, for the brief introduction. I think this analyst briefing is quite important for us, and we are here to share with you our journey and where we are. We'll focus initially on the current year. We'll take you through our progress so far, our achievements so far, the challenges and the opportunities which are ahead of us. So we are going to share very briefly background information. We'll focus on 2022. We'll share with you how the year end looks like, and also beyond 2023. So that's it. So our CFO, Javed, will take you through these slides. Javed, over to you.
We'll start with the company overview. Some of you will be aware, for some it might be new. Our subsidiaries, Fauji Meat, Fauji Food, and FFBL Power Company, and our associates is PMP, Pakistan Maroc in Morocco, and our Askari Bank shareholding at 22%. Our vision, values, and mission. We are primarily focusing on sustainability, people development, growth, food security, stakeholders value, and CSR efforts. These are the key areas which are of utmost importance to us. FFBL journey. We started our project somewhere in 1993 with the idea of being the only DAP manufacturer in Pakistan. No one has ventured into this business ever since. We did our expansion in ammonia and DAP during the next phase, 2002-08. We started our affiliation with a Jordanian phosphate company, and then we were FJFC. Later on, we collaborated with OCP of Morocco and formed a JV by the name of PMP. 2009 onwards, we started facing gas curtailment, which was a phenomena throughout the country in general, and particularly for the fertilizer industry. We invested in renewable energy and embarked on our SAP implementation. Then the next phase, we started in our investments, vertical integration with FPCL. So they're the ones who provide us with steam and power. And this is how we use the gas, which was earlier being used for our fuel requirements. That's what we've diverted to our main production and being used as feed. We entered into Fauji Foods. We acquired Nurpur. We set up Fauji Meat and our investments in AKBL. Last couple of years, we've embarked on a new journey, which is basically business and cultural turnaround. And we've seen the results in our financials as well as in the team that is making it happen throughout the period. We've got some highest numbers, the turnover, the production numbers, and so on. Our main products, urea and DAP, we've got three major inputs. Fuel and power, FPCL, as mentioned earlier, two raw materials. One is the natural gas coming from SSGC, being the only plant on the network, and the primary raw material for DAP coming from PMP, in the form of phosphoric acid. We have consistently achieved our production levels quite higher, significantly higher than our nameplate capacities. The bottleneck or the scarcity has always been the gas. Otherwise, our production facilities have been well kept, well maintained, and we've been producing way beyond the nameplate capacity, especially in DAP. Our production philosophy is that we emphasize on and prioritize DAP over urea. Urea production is somewhere slightly shorter than the nameplate, primarily on account of the gas availability shortage. Looking at our strengths, weaknesses, our product is unique. We are the only ones who are producing that. It's the only ones who are producing granular urea. We've got integration, offshore integration, gas curtailment. We've talked about. Our plant is 1967 vintage. So we do have a slight disadvantage when it comes to energy efficiency as compared to the newer plants in the country. We see quite some opportunity going forward, improvement in our existing products, coming up with some other ideas of new tweaking with our portfolio, actually. Trading, O&M, trading in commodities, quite a few activities where we have started looking at recently. Primary threat, climate change affecting the farm economics, and the farmer being our consumer is the single highest threat we foresee. And energy costs going forward is also an area we're looking at, and we'll be watching it closely. Board of directors, most of them do not need introduction. It's quite a diversified board with gender inclusion as well. The MENCOM being headed by Arif Rehman and seasoned professionals, part of the team. All right. In the last few months and years, we've received quite a few safety awards. Our safe man-hour record, alhamdulillah, has been phenomenal. 10 years plus without any incidents. We've reached 33, 34 million safe man-hours. Quite a few accolades. The initiatives we've taken up in the last couple of years, we've got cultural transformation, which includes diversity, empowerment, leadership programs, so on and so forth. Operational excellence, we've been working on improving all the areas on our operating side. Energy index especially, as we've seen quite some improvement over there despite the gas issues. All the processes are under review and synergies with other group companies. CSR has always been a cornerstone. Our existence actually, and all our most of our profitability goes out to our sponsors, being a foundation. So we take pride in our CSR activities, the one we do ourselves directly, and even the ones which we are assisting in through our sponsors. Coming to the fertilizer industry, this year we've seen quite some. In the 9 months, we see Pakistan's fertilizer industry at around close to 400 billion rupees. The DAP market, we've managed to get a 54% share in DAP in the first 9 months. Our usual contribution is somewhere around 35, 40, 35%. Despite the smaller size shrinking market, we've managed to grab a higher share. Coming to urea, we're consistent, around 7, 8, 9% is our usual market share. And as you can see, the DAP market was around 700,000 tons in these 9 months, and urea being close to 5 million tons. But if you look at the value, DAP comes up at 45% of the value of fertilizer in use, whereas urea is down to 55%. Urea continues to be heavily subsidized, and the gap between international market is increasing day by day. Looking at the DAP industry, as you can see, the offtake or the availability. Availability has come down to 1.1 million tons as against to 1.6 of last year's 9 months. And similarly, the sales have dropped around 40% from 1.2 million to 700,000 tons. So what's happened is that the imports have shrunk, have gone down. Imports have kept themselves at pace with the market size. We have been producing as much as we could. A couple of phenomena we are seeing: DAP prices going up, the commodity super cycle causing the price hike. And as DAP becomes expensive, the farmer starts substituting it with nitrogen, with urea, being a cheaper and much subsidized product. Though this has its own effects on the yield and produce of the farmer, but their affordability is a key area. Earlier, whenever DAP used to cross a certain threshold, the government used to come in and subsidize DAP as well. This time around, they had a scheme which was going on for the last year or two, but they did not, the government was not in a position to actually come in and make it affordable for the farmers. So hence the 40% decrease in the market share. Urea has been, availability was slightly better. 2 of our plants were running on RLNG. Therefore, the availability is on the higher side, whereas the offtake has increased. One of the factors is the substitution factor, and another factor is that we suspect quite some urea does manage to cross the borders due to its being highly subsidized as compared to the international price. Okay, if you look at the international price of urea, we've seen quite some volatility within this year, whereas the local prices have remained constant. June onwards, there was a price increase on account of the GST exemption. Other than that, since the gas prices have not increased, therefore the prices are pretty much in the same range. And if we look at DAP, we substitute around $180 on an average per ton by producing locally. So these are the numbers as a delta between the imported finished goods versus our raw material being imported. You can call it kind of a primary margin. Looking at FFBL, we start with DAP. We managed to avoid our turnaround during the beginning of the year, January. We managed to get some gas and we skipped our annual turnaround. So we ended up producing around 100,000 tons more of DAP, which includes which also includes the ever highest production during the month of August. And as far as FFBL sales are concerned, we do see around 26% reduction. So you'd see that despite the market being reduced by 40%, declining by 40%, we managed to maintain our share in relative terms. So our decline in sales is only 26%. Commendable performance by our marketing team. Coming to urea, it's a pretty stable graph. The production is almost the same, and so is our sales. Financial numbers for the first 9 months, we've got some ever highest numbers, gross profit ever highest. We've got our ever highest turnover, operating profit of 13 billion is the ever highest in this period. Our EBITDA was 10 billion, profit before tax 6.6 billion. However, you'll see a significant hit on account of taxation, which lands us with a profit after tax of 1.7 billion. I'll show these numbers to you in detail going forward. We'll have a look at our cost of production, which has gone up by almost twice the size. As against 59 billion, we are at 127 billion. So this means that we've got quite some financing is involved in it, and our proactive management has resulted in, well, if you look at our raw materials, they went up by around 140%, whereas phosphoric acid alone has gone up by 152%. So the other raw materials are the ones where we managed to keep the prices on the lower side, whereas utilities went up by around 85%, out of which fuel and power is 148. So it's the coal price which was a bigger hit for us, the financing cost and the US dollar parity. These three areas do affect our power cost. Looking at our bottom line, 2020 FFBL standalone, we were in a loss of 900 million. Last year was exceptionally good, 6 billion. And as you see, we've come down to 1.7. Now, there are two major hits we got this time around. Here we go. One of them is super tax. 2.7 billion is on account of super tax. It's a 10% charge on last year's taxable income. So that's something which no one saw coming, something which they decided in June. And our rupee devaluation, which cost us on gross basis at around 7 billion rupees. So post-tax impact is around 4.8. Had these two exceptions not been there, our bottom line would have been somewhere around in the north of 9 billion rupees. Just a way of looking at it. So the management team did the best they could. However, the overall economic situation in the country did affect our results. Our debt equity, 2020, we were at a leverage of 84% on net debt basis, which was quite better in 21, which was again a bit of an unusual year. Last year, you must have noticed that we managed to have quite some pre-seasonal sales. Otherwise, looking at all the other years, our DAP, we end up selling 60% of our DAP in the last 4 months of the year. So that means we accumulate our production and our inventories up till August, and they start liquidating in September onwards. The floods and heavy rains did cause Sindh being inundated and resulted, well, the land is not cultivable. Some of it is being cultivable now, but August, September, October were the heaviest hit months. We've seen our DAP offtake to be the lowest ever in the history of Pakistan. So quite a challenging couple of months behind us. Despite all that, the earlier 6 months performance did help us, and we're at a debt equity of around 50% each. Coming to the consolidated numbers, again, ever highest gross profit, ever highest revenue, ever highest operating profit. Our top line is around 30% higher than it was in the 9 months period of last year. Bottom line primarily reflecting FFBL's results. As against around 6 billion, we closed at 3.6 billion this year. And our debt equity is at around 56 to 44. Again, the super tax and the devaluation is the one causing this reduction. Otherwise, even the consolidated numbers would have been almost twice as good as they were last year. Coming to our subsidiaries, FPCL is performing consistently, providing power and steam to us, financially quite stable, and they've done a very good job when it comes to sourcing of coal. We've managed to use local coal, some of the Afghan coal as well, and some imported from Indonesia. FML, the focus is on capacity utilization, cost optimization, and we are slowly and gradually tapping into the export market. We're trying to reduce our risks as much as possible. That is why we are a bit slow in the export market. But the loss is, their numbers are also better than the last year's 9 months. Fauji Foods, a very strong revenue growth. The group is planning to inject 11 billion rupees in Fauji Foods. The primary, the idea is to reduce its leverage. The finance cost is one of the major reasons for its dismal performance when it comes to profitability. So we would like to help them out with their liquidity requirements, and since they're already moving into a different, they've changed their philosophy. We are trying to reduce our reliance on the tea whitener as it has become commoditized and the margins are very slim. We are focusing more on value-added products, UHT milk, the butter and cheese, so on and so forth. All right, so that was the 9 months. How do we see the coming couple of months? The prices have been significantly high, DAP prices up till now, but we see a softening in these prices going forward. A few days back, the Prime Minister did announce the Kisan package. FFBL has voluntarily agreed to reduce their DAP price to make it more affordable, being the peak of Rabi season, sowing preparation and DAP usage. We would like it to be more affordable for the farmer, which will also help us liquidate the inventories which we have built up till September. That will resolve our offtake issue as well, which was a result of the floods. Economic factors, currency devaluation has hit us significantly, as we've just seen, the overall economic downturn. We expect that a good wheat support price would also be a factor which would encourage farmers to invest in the coming season, and that would result in a better offtake of DAP. Gas curtailment remains a risk area. We do foresee some or a significant gas shortage in the country going forward, especially in December and January. Now, the challenges, it starts with the commodity super cycle, the floods, inflation, the energy crisis. So what are we doing about it? Apart from the operational excellence, cultural transformation, we do foresee that the economic situation would stabilize gradually and slowly in the next few months. We do hope that the Russia-Ukraine war comes to an end. That is where we see the energy prices to be softening up a bit, and the revival of fertilizer offtake. In the last few days, we have seen an uptick in our DAP sales, and we are very confident that if not all, but then at least the major part of our inventories would be liquidated by the time we close the year, inshallah. And in any case, even if we are carrying some 20, 30 or 40,000 tons to the next year, since January is our turnaround shutdown, therefore that inventory will also be liquidated. So we don't foresee any issues going forward. At the end of the year, we are foreseeing a DAP market of around 1.5 million tons. It is come down or it's expected to be around 20% lower than the last year's market size. But that also means that the market would be growing by 100% in the next 3 months. Urea is expected to close at 6.6 million as against 6.3 of last year. Nothing unusual over there. इस पे आप कुछ कहना चाहेंगे?
I think I would like to touch about, what are the opportunities and what is the future strategy. The Kisan package is going to make a lot of difference, and the support prices which the last government and the current government, have implemented, that has significantly improved the economics of the farmer. So, for example, for wheat, it is of the order of an improvement of 40 to 45%, and similarly for rice and maize and others, it is 25% plus. So, as far as the fertilizer sector is concerned, we see a good comeback. So long term, because this is part of the business, food security, so we really see the business moving in the right direction. Long-term sustainability, gas is an area where we are focusing very, very aggressively, and there is a multi-pronged strategy. So short-term, medium-term, and long-term. We expect at least 2 more small and medium-sized gas fields in Sindh to be integrated with SSGC, which is going to improve the gas situation in short, medium term. And for the long term, there are at least 2 possibilities which we are pursuing very aggressively, so that before the current allocation, which ends in 2025, we are, well in place. We are currently working very aggressively on the product portfolio realignment. So there are, multiple aspects on which we are working. One is value addition in the existing products. In parallel, we are working on some expansion and bringing some value-added products as well. And at the same time, while working with our sister company, Fauji Fertilizer, who manages our marketing, we are expanding our agri services. So we are moving from commodity sales to a solution provider concept. So this is a concept which is going to happen in next 2 years gradually, and that will bring more value to the both companies. And as I touched, so growth propositions are also on the table, and these are but also linked to the gas availability, and we are very confident that these will be realized, and some of the relevant testing has already been started in this particular area. So we really see 23 and beyond quite positive years for business sustainability, growth, and our top line and bottom line as well. Thank you.
Thank you so much. Thank you so much, Mr. Javed Saab and Mr. Arif Saab, for the detailed presentation. The floor is now open for the Q&A session. And I would request all the participants to please put their questions in the chat box, because I will be asking the management directly. So I have received a couple of questions. So beginning with the first one. So Mr. Saad from Atlas Asset is asking, what has been the cost of phos acid per ton for the 3rd and 4th quarter for FFBL? And what are the input taxes on phos acid?
Sorry, what was the second part?
Input taxes.
Okay, input taxes.
Input taxes.
The 3rd quarter has been finalized at $1,715 a metric ton, whereas the 4th quarter is expected to be finalized somewhere around $1,200 a ton. It's still going on a provisional basis, but we expect it to be finalized somewhere around $1,200 a ton.
Okay.
Regarding input taxes, we have a 5% GST on phosphoric acid, 17% is on I think 5% on feed, and the rest is all at 17%. That is the GST which used to be recoverable, which has now become our cost of production.
Okay. Thank you. Moving on to the next question. It is from Mr. Hassan Raza. He's asking that please touch upon the recent 2,500 rupees price slash announced by the government and price fixation of 11,250 rupees per bag. Understandably, the international DAP rates have come down, but does it result in any one-off inventory loss or NRV adjustment for the company, or the government will compensate in some form?
As you've seen that the cost of phosphoric acid has also come down significantly, around $500 to $500 a ton. So that translates, that is the area where we'll be getting some relief, which is being passed on to our consumer. We do not foresee any inventory hit or NRV as we call it to our inventories. We do not foresee any losses at all. So, and the government is not chipping in the price reduction. DAP has always been a deregulated market and it will continue being so. The international prices, yes, you're correct, have come down. They were at even above $1,000. We've seen some imports at $1,030 a ton, which are still out there in the market. Some importers have imported at around $800, $850 a ton. The last transaction which we are aware of is somewhere around 760. So the importers would be having an average cost of import, and everyone has a different conversion rate of their lending. So 760 is the cheapest we have seen, which is yet to come in Pakistan, with somewhere around mid-November or maybe even a bit later.
Okay, thank you for clarification. Moving on to the next question. It's about, given your high inventory levels of 71 billion rupees and comparatively lower volumetric sales, can we expect a sharp increase in storage costs in the coming months? Or do you expect inventory levels to normalize after the price cut?
Sorry, what was the first part? Can we see?
Can we expect a sharp increase in storage costs because of the high inventory levels?
Yeah. The storage cost will go up, but it won't be very significant because it's for a couple of months. And since our inventories have already started liquidating, so we don't find it to be a very big number going forward.
Okay.
Normally, the marketing team does have a standard storage capacity with them. And whenever there are such instances of high inventory, they do manage temporary storage space. So given the numbers, we don't expect it to be a significant one.
Okay, thank you. The next question is on VACOG, that have you had any discussions with the government over its implementation?
The discussions are on. The government is still working or considering on it. They are very much cognizant of the fact that if the gas prices are increased, so will the urea price at least go up. So, and that is something which they are not very comfortable with. So the discussions are on, but we are not aware of any conclusions if they have come up with any.
Okay. So Mr. Mujtaba is asking that what is the average cost of coal inventory that FFBL Power Company has?
Well, that's a difficult question, but I can assure you that since the international market is somewhere around $300 a ton as yet, still at that levels, FPCL's coal procurement has been significantly economical, and their cost is quite below that number.
Okay. So since that you mentioned that FFBL has been procuring from local and Afghanistan market as well. So can you share the composition for it, that how much is it being procured from local market and Afghanistan?
There are two major issues over here. First of all, I don't have that number, so I won't be able to give you a specific number, but the way it is, the plant manufacturers design a plant on a certain specification. So using local coal as a mix to the imported coal is always limited, 10%, 15, 20, whatever. So it's something which is done on a very gradual basis. And at every stage, we've got to see the way the equipment reacts to it. And most importantly, when they go into their annual turnaround in January, and they open up their boilers and all the other stuff, that is going to give us the confidence of how to take it forward. So that's how it works.
Okay.
Then again, the availability of local coal itself is not as much as we would like to have it. So, we've also started experimenting with Tharcoal, despite the transportation and logistic challenges. We are optimistic that that can be an option going forward, a consistent option going forward. And that would also give us some financial benefit by using Tharcoal.
Okay, thank you. The next question is on the prices, that what is the spot DAP and urea prices for the company?
Sorry, spot DAP is relevant. That's what I had mentioned. $760 is around 760 is the quoted price of the last import which has taken place in Pakistan. अच्छा, आप अगर पाकिस्तान हमारी प्राइस पूछ रही हैं तो right now we are at Karachi, ex-Karachi, 11,280 is our recovery price for DAP. And if we look at urea, we are selling at around 2,200 rupees a bag. That's an average price across the country.
Okay. So the next question is from Mr. Abdullah Umar. He's asking what were the company's net sales during third quarter calendar year 22 and why FFBL's realized DAP price was significantly below than the other industry players.
When you ask for net sales, I guess these numbers are there already. It's like 22.6 billion is our net sales for the third quarter. The second part is, why is our realizable price lower than others? I am not aware of such a thing. We believe our selling price is higher than any other DAP seller in the market at any given point in time. So I'm not sure what is actually being asked.
Okay, so the next question is from Mr. Asad Ali. He's asking, as a part of Kisan package, will DAP prices be offered at a discount to import parity?
As I had mentioned already, we are matching the imported product. It's a deregulated open market. We can't really charge much of a premium. There is some, but not much. So it won't be sold at a discount from imported product.
Okay, moving on to the next question. Mr. Bilal Ahmed is asking why FFBL has booked significant exchange loss in third quarter as Moroccan currency has also depreciated during the quarter.
Well, Moroccan currency does not have a play in it. The phosphoric acid price is pegged with India and is in US dollars. And the exchange loss, well, The way it works is we usually avail a credit of around 60 to 75 days on our purchases. This is the agreement which is in place since inception. The exchange loss is an accounting treatment. It's the delta between the exchange rate on the date of arrival of the product versus the date when we make the payment. Had it not been an accounting technicality, I would have preferred to book this number as a cost of production. So, however, this is how it goes. Now, ideally, the next question would be that if the dollar rupee parity is fluctuating significantly, why would we like to take this credit? So we've got, since it's part of the contract, we don't really have much flexibility. This flexibility has always helped us finance our inventory build-up over the last 20 years. However, we were considering for an exception to make payments on spot, but when sales were not taking place and inventories are being built up, we do not have enough liquidity to pay off the raw material immediately, whereas for foreseeing the finished goods being sold 3-4 months later. So part of the inventory is financed from local borrowing and part of it is financed by the seller.
Okay, the next question is from Mr. Abdul Basit from Taurus Securities. He's asking, does the company meet all of its power requirements from FPCL, and what is the cost of power?
Yes, all of our power requirement is met by FPCL. Cost of power keeps fluctuating, therefore giving a certain number would be difficult right now.
Okay. And there's a follow-up question on FFBL power that why wasn't there any payout, dividend payout in this quarter? Can you please guide?
Okay. As I think there is another question which realizes we have FPCL is investing in FFL in the next month or so. So that is one of the reasons. Secondly, as you've seen, the coal prices have gone up by 4 to 5 times in the last year or so. So that is also causing some working capital requirement pressure on FPCL. So these are the two major reasons why they've not been in a position to pay out dividends during this quarter. But if you look at FPCL dividend was pretty much made up by PMP paying a higher dividend. So we don't really see on a net basis.
Okay, so can we expect lower payouts from FPCL going forward as well?
This will depend on their liquidity, the coal prices and their working capital cycle. Hopefully, yes. That's the best I can say.
Okay. So there's a question from Mr. Abdul Basit from Taurus. He's asking, considering the higher prices of phos acid this year, what are your expectations for the next year?
Phos acid. Well, as far as the phosphate market is concerned, we've seen, and even sulfur, by the way, sulfur is also crashed. So we see sulfur stabilizing. Phosphates are likely to decline a bit in the earlier part of next year. Somewhere around mid-2023, they're expected to settle. However, these are the estimates or forecasts we can make at this point in time. How does China manage its production and exports? What happens to the crop prices and the Ukraine-Russian war and the global commodities is anyone's guess.
Okay. Mr. Akshay Thakur from Ismail Iqbal Securities is asking, what was the electricity generation by FFBL Power and how much was dispatched to electric during third quarter calendar year 22?
यार इतनी डिटेल के नंबर मेरे पास नहीं है. Why everyone seems to be more interested in FTCL than FFBL? नहीं ऑफहैंड नहीं मुझे नंबर नहीं याद.
But let me give you a sense. I think FTCL has done in this year better than the budget. They have managed their coal procurement very smartly. So on overall basis, their profitability is quite consistent or slightly more than the budget. So this is the sense I can give you, on overall basis.
Okay, so moving on to the next question. It's from Mr. Ali Akbar from Optimus. He's asking, are you planning any plant turnaround in 4Q on the back of lower DAP sales by farmers being hit as well as gas supply issues?
The scheduled turnaround is in January, Ji, because that's when the gas is at the lowest. December, we do anticipate reduction in gas supply, but it doesn't come to a halt, doesn't come to a standstill. So the planned shutdown is in January, as we do it always.
Okay, thank you for the clarification. Mr. Mohammed Saad from Atlas Asset is asking, what were the last quarter primary margin of DAP per ton?
That's tricky because primary margins we calculate usually in dollars and our asset is averaged out. So इनको अपना फाइनेंशियल मॉडल सीधा करना पड़ेगा. इनपुट की प्राइसेस हर क्वार्टर की हमने दी हुई हैं, उसको वेटेड एवरेज के ऊपर कंजम्पशन में डालें और अपना हिसाब लगाएं कि कितना होगा.
Okay. So could you also highlight some of the key risks to the company going forward? And what are the key challenges ahead?
Okay, overall, the macroeconomic situation will remain a challenge. US dollar availability, number one, because since our major raw material for DAP at least is coming from abroad. So availability of dollar, the fluctuation of rupee dollar parity is going to be a challenge. The affordability of the farmer. So as Arif has already mentioned, the Kisan package will help and reduction in DAP price will help on that front. And gas availability will continue to be a challenge if you look at the next few months, 4, 6, 8 months. What else? Inflationary pressure, everything is all the imports, all the cost of production items are going up. So inflationary pressure is going to affect the business. We won't be the only ones being affected, like everyone else. Super tax का issue है. Subsidiaries. Sorry.
All subsidiaries, they are doing quite well actually now. So they were like 2 years, 3 years back, they were in a different ball game. But in future 2023 onward, we really see them all in green, all profitable, all contributing something back to us. So that is an area which is of lot of comfort to us.
Okay. So Mr. Hussain, Yusuf is asking, what is the inventory level of phos acid?
By the end of third quarter, I think it was around 10 billion rupees. So again, there is a certain number of shipments which are on the high seas at any given point in time. There is a certain level of inventory which we manage with us. But we can't really play much with it because the voyage time is slightly over 2 weeks. So this is the standard volume.
Okay. So there's a question regarding the investment in the food business, and then the analyst wants to know that what is the reasoning behind investing 4 billion in the food company, since it has been making a gross margin of only 3%, while the rest of the food companies are making better margins. So what is the rationale behind that?
A few days back, Usman did conduct their FFL's analyst briefing, he did cover most of these questions. Now, the question is that the business is the company is part of a very competitive business, and it is also sensitive to the consumer buying power as well as the milk availability and its pricing and the overall inflationary trend. So it's not been doing well, yes, but the question is it in the right direction? Are we taking the right steps to improve the cost of production, to improve the efficiency, to come up with the right mix of portfolio, which will take it into a positive number, into profitability going forward? So that's a yes. There are quite some initiatives which are being taken to manage its network of supply of milk, to reduce its cost of production, to make it more competitive and more efficient, and bring it at par, if not better than its competitors. As I mentioned, there is a primary shift from the tea whitener, or I'd say from the low margin products into the higher margin products. There is a constant effort to increase the base of consumers, not only the retail, but also the other institutional buying, other institutional customers, where we can manage some bulk sales. So the business is moving in the right direction, and we are very hopeful, inshallah, that you'll be seeing better results going forward. The top line is, we've already seen the top line growing despite all the challenges. Their production levels, I think August or September was the ever highest production level they achieved. So all the indicators are indicating a positive change and improvement, and that the direction is right.
I would like to add just one more point, that, you know, as sponsors, the group, so which includes FFBL, FFC, and Fauji Foundation, we are all convinced that, you know, the strategy on which we are working right now, that is in the right direction, and that is going to give the right results, and that is why we are investing ourselves in this. So we are very confident that this is going to turn around the business, and the business will be soon in green, and we have deliberated from all aspects.
Okay, thank you for the clarification. And there's another follow-up question on the meat business as well. Can you please share your thoughts on that as well? When do you expect it to turn green? And what would be the sales in calendar year 23, if you could share that too?
The meat business is also consistently reducing its losses. The efforts are to improve its efficiency, to reduce the drag. Even there, we had paid off all the loans, so financing cost is out. I believe on a quarter-on-quarter basis, the drag is reducing and will continue to reduce going forward.
Okay, thank you for that. I would just take one last question since we're running out of time. It's from Mr. Saad from Atlas. He's asking that since you have projected DAB offtakes to double in the last quarter of the year to 1.5 million tons, given the farmers' liquidity issues after the floods and lower offtakes that have been witnessed, can you kindly share some light on that?
Okay. You're right, it looks quite optimistic. A month ago, we were estimating around 1.4 million tons, and the industry by and large is estimating 1.5 now. Now the question, how would it double? In the earlier quarters, up till June, we saw a very healthy sales trend. We need to realize that there has always been a certain trend of DAP sales. Comparing it by 2020 alone or even with 21 will not help. So the DAP offtake needs to be compared with at least 4 or 5 years. Traditionally, the sales are low, and the sales have always picked up post-August. What we did up till June, we managed to sell pre-season. So the fruits we enjoyed on a 6-monthly basis were a pre-sale. That product was in the pipeline when we came into the third quarter. Third quarter faced the other problem of floods and rains. As far as the Rabi season is concerned, Sindh is the one which starts the offtake, and then it comes into Punjab somewhere second half of October, November onwards. We lost the early Sindh market because of floods. Punjab market, we expect north and center to be healthy on account of, one, reducing price of DAP, two, much better support price of wheat. Up till last year we did experience a reduction in the acreage of cultivation of wheat, whereas this year we anticipate a higher acreage being used for cultivation of wheat. And wheat is the primary produce which takes up DAP at the preparatory stage. So we are confident that 1.4, 1.5 million tons of a market is achievable. If you look at the numbers, yes, it appears to be quite an uphill task, but we are up for the challenge, and that's what we're targeting.
Above all, I think the farm economics we must keep in mind, especially for wheat, which has gone up by at least 45%, because the support price is significantly high now. So that is a very important additional point. So is the support price coupled with quite a few other buyers, we believe that is going to take the that is going to take the offtake. And it looks that the various government functionaries, they are also very active, because they understand that if wheat acreage is not increased, they are going to take a major hit next year as well. So the import price is going to be significant. So all these things combined together, we are quite confident that our estimates are the right or slightly on conservative side.
Thank you so much, Mr. Javed Saab and Mr. Arif Saab. With that, I would like to conclude today's corporate briefing session, and I would request you to say the closing remarks.
Thank you very much, Aisha, for organizing this briefing. Thoroughly enjoyed, and I think we are happy to because after every quarter we organize our briefing. In any case, I think this is unique in terms of the analyst group you have brought here. We are happy to share the profile and our plans and our progress, and we are happy to organize another briefing at a suitable time, whenever there is a requirement. So thank you very much for the keen interest, which is reflected by the questions which has been asked by the analysts. Thank you very much.
It was a pleasure hosting you, sir, and I would like to thank all the participants for joining us today. And with that, I would like to conclude today's session. Thank you for joining. Take care. Allah Hafiz.
Assalamu alaikum.
Allah Hafiz.